What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. Okay, so it's definitely time to make a full breakdown of the situation that we currently have on gold, the most traded commodity in the market. Now, why do I want to speak about gold? Because at the moment we have very interesting price action for a potential opportunity on it. So I want to give you guys a full breakdown of the situation that we have and how we can be looking to possibly capitalize on the next potential move. And as usual, I will be keeping this analysis as educational as possible. So first, we will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probability setup on this pair, actually on this commodity and obviously in this market. Now, starting here from the monthly time frame, what do we have? Now, here in the monthly, we have a market which has just provided a nice M pattern. Now, generally speaking, after the creation of an M pattern, what you expect is for the market to provide a move to the upside. So you want to see the market provide a move to the upside to complete the M pattern at the previous support, now turned resistance. So here in the monthly, there is definitely the possibility to see this market create a nice move to the upside to complete this pattern exactly at this previous support, which is now turned resistance. Actually, we want to see the market go even lower before creating the completion. In fact, usually when you see an M pattern, you first see the market go inside of the completion area, which is here, actually the reversal zone, which is here, before the market then creates the move to the upside. So here in the monthly, everything looks quite bullish, and we do expect the market to provide this move to the upside and completion at the neckline. Going down on the weekly time frame, what do we have? Now here in the weekly, we can see how the market has just provided a nice impulse to the downside, followed by this correction, and the market is already starting the continuation to the downside. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we take our Fibonacci from the high to the low of this impulse, we can see how the market has just retraced exactly to the 0.32 of the Fibonacci taken on this impulse, from which there is definitely the possibility to see the market create more continuation to the downside. And in fact, that is exactly what the market is doing to complete the impulse correction and impulse pattern to the downside. So also here on the weekly, everything seems quite bearish and we can expect more continuation to the downside. Going down on the daily time frame, what do we have? Now here on the daily, I had spoken about gold after the market had provided this W formation here. When the market was at this area, I made a full breakdown on gold explaining all the reasons for which from this zone we expected the market to provide this move to the downside, and in fact that is exactly what the market did. Then we had a market which broke below the structure. From here, we wanted to see the market provide a nice move to the downside. And by the way, I will link also this previous analysis in the description. You find both this previous analysis in the description, so you can go and check them out for further reference and more free education. If you have any questions or requests for the next video, make sure you leave them down in the comment section. Also, make sure that you smash that like button and subscribe. But at the moment, what do we have and how we can be looking to capitalize on the next potential move here on gold? Now here on the daily, we can notice that the market has just provided a strong impulse to the downside. Now after an impulse, what you expect is for the market to provide a correction before the continuation to the downside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are doing in the market, what we can see is that with the last reports, hedge funds have been decreasing their net positions on gold. In fact, we went from having 279k net positions all the way down to having 174k net positions, with 12.6k shorts added with the last report, reaching one of the highest levels of shorts that we had so far. So on gold, what we can see is that from an institutional perspective, hedge funds are adding shorts, going from 55k to 88k, and closing longs, going from 349K to 262K. So clearly, we are getting here quite bearish on gold. And we see this clearly reflected in the price action. The market has been in a downtrend, obviously because the biggest institutions are currently shorting gold, as we have already seen. So there is definitely the possibility to see more continuation to the downside, for the market to reach the reversal zone of the M pattern that we have already identified on the monthly time frame before the move to the upside can start for the completion of that a pattern that we have already identified. So here on the daily, how we will be looking to capitalize on the next potential move for gold. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes for the directional aspect of the market. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the upside. And we will be waiting for the market to shift from a bullish market, as we will have, to a bearish market from an intraday perspective. And as soon as the market will shift from a bullish to a bearish market, at that point, we will be adding gold to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this impulse correction and impulse pattern to the downside, and for the market to provide a lower low. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also let me know in the comment section below any pair that you would like me to break down in the next videos. And I will also leave a link to the mentorship program in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering any question that you have every single day. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.